Hey traders, welcome to Charts and Coffee. Happy Wednesday, everybody. Great to see everyone. Hope the morning is off to a good start. I am back at the OG office and ready to kick off today's Charts and Coffee, as well as our session in the Sector Secrets Mastery. We've got a couple things that we're going to be doing as soon as we kick off that session there. One is likely going to be, we'll see how this looks at the open. I'm going to show you here. So one is hopefully likely to be our profit taking in Disney, or at least moving closer towards that. And then let's see, JP Morgan, that's another open trade. And then, well, actually, let's jump to Bank of America, because I think most of you know JP Morgan have scaled out. Then we got our Bank of America entry, which is moving along really nicely. So we've got some focus on a knock-on effect on Netflix. Do I want to play Netflix directly? I do not, right? If we know Netflix is coming out with earnings, and there was a legit setup in Disney, we did that in the Simpler Central as well as the Sector Secrets Mastery yesterday, which is great. That's the kind of stuff we want to focus on. I don't want to focus on what company has earnings and guessing on which way it's going to go. Although congrats, definitely to those of you that took advantage of that big move in Netflix, whether that was selling a put or whether that was just a straight up directional call. Congrats, yeah. And thank you, because that's certainly not going to hurt the Disney position. All right. So let's see what else we've got going on. A couple things that are also on my radar. And if you checked out the video from Friday as well as yesterday, yesterday I talked about Netflix and Disney, and I discussed a number of open trades that we have open in the mastery. So if you want to check that out, try to kind of get up to speed with what we have there, feel free. That was in yesterday's video over at the Simpler Trading YouTube channel. And there was a couple other things that I'm really interested in. And I mentioned 3 potential breakout setups. Now, we don't do breakouts like most folks do. I don't wait for resistance to break and then buy through that. What I like to find is an environment where things are compressed, and then rather buying through resistance, we buy at the floor, waiting for that bounce. And I've mentioned over the past couple of videos, crude, gold, and bonds. And in the interest of sticking with sentiment, momentum, and trend, all 3 are important, none more so than trend. We discussed the best of those 3 that could be breakout trades that we would buy from daily price movement range support to set up a lower risk entry with the breakout without having to chase momentum. The one that came out as the number 1 choice is gold for one really simple main reason. It is in the bullish hemisphere. When we think about the direction that we trade anything, that's the first decision, right? Do we want to be a buyer of calls, a buyer of puts? Do we want to be long, or do we want to be short? And after that, certain symbols will be the best example of that particular strategy. And that's where structure dictates strategy is so important. That's why so many of the indicators on my screen have one main job. What is the most likely path of well, either least resistance or least support, right? Let's think about it. Least resistance would be the upside. Least support would be the downside. That's always the first job. And it's amazing when we can find that. And I don't mean just sentiment, and I don't mean just momentum. Those are fine, smaller, more short-term looks, but those do ultimately culminate in a trend. And if we can find those trends, we're in great shape. But what about those places where we don't have a trend? And gold is a great spot from which, if we're looking for that ultimate breakout, look at crude, look at bonds as well. Daily price movement range is a really cool place to start. We do have the PCE on Friday. My Sector Secrets Mastery folks, we will have a bonus session for futures trading and pre-market analysis and macroeconomic analysis with that PCE on Friday morning. So heads up, we'll send out an alert on that. And let's get to our questions. As always, if you got a question, type it on in. I do see one right here off the bat. Hey there, Alex. How are you? Seems that when there is a high impact event during or just after the clearing, price action during the clearing is less volatile. Have you found that to be true? Yeah, I don't know if the description I'm going to use is the way it was intended, but I heard of something called tall poppy syndrome, and I'm sure it has many, many different meanings. But I was thinking about, what if you are the tall poppy, right? And the mower comes across, and that's the first one to get cut. So there's this who wants to stick their neck out? I call it guillotine syndrome, right? I think about tall poppy and think, what is it that's happening before a high impact event, a hot zone, right? It's guillotine syndrome. Who wants to stick their neck out? Who wants to put on a sizable position? Some people do, but I don't believe that's the larger group of participants. A lot of folks are just waiting for what's going to happen, or they've already stuck their neck out. They've already placed their bet well in advance of the event, and now all they can do is wait. So I do believe that to be true. Guillotine syndrome. Who's going to stick their neck out right in front of the event? And yes, I do believe it is true. It makes perfect sense when you think about it. So much of what we see in the market, if you just step back and you look at the candle and remember, it's actually opinion, it's psychology, it's fear, it's greed, it's a person. When you step back and look at that, all of a sudden you remember, oh, okay, we're really just trading psychology. We're not trading the NASDAQ. Not really. We're trading the opinion of the NASDAQ, right? We're trading the psychology of the NASDAQ. Are we trading Netflix? I mean, really, did Netflix do anything so amazing that merited this move? Maybe they did. I don't know. But here's what I do know. We're trading the opinion of whatever it is they reported in earnings. Again, that's where I say, if we can at least step back and say, we don't really trade Netflix. We trade the psychology around Netflix. And I won't even say the fundamentals. We trade the psychology. And the more we look at trading as really a study of history and sociology, not economics, not finance. That's why the peeps on television seldom get it right. It's the wrong paradigm. It's not financials and economics. It's history and sociology, right? So absolutely, the answer is yes. Absolutely. Great observation, Alex. All right, next up. Good morning. Good morning. All right. Eddie asks, can you give us your rule of around true gap and gap? I have no rule. Eddie, a true gap, I can give you the definition. A true gap, and that's not my lingo. That's actually, I believe, market profile lingo. A true gap versus a vanilla gap. A true gap is when the gap open happens. Of course, that's going to mean there's an open and a close. So this is more a stock and ETF conversation. So when there is a gap, if it's above the close, right, and above the high, that's a true gap. If it's just a close to open gap, that's a vanilla gap. Those are common. So I don't have a rule, and I don't believe that gaps have to fill immediately. Many a trader has been absolutely steamrolled by the gap in the go, not the gap in the flop, right? And so a lot of times, rather than, my first sensei when I was learning martial arts, my mom put me in martial arts very young. And one of the first things my sensei taught me is never expect an anatomical response. So remember, I'm about 9 and it's almost very young. And he's teaching me the punches and the kicks and the elbows and everything else. And he said, don't think that just because I taught you this series, that that's the way the person's going to move. You have to keep observing, right? Don't expect an anatomical response. It would behoove us to remember that in trading as well. Don't expect a response in line with sort of the expectation. So when it comes to gaps, if they're going to gap and go, take a look at support and resistance. I think that if you were to look at the first 5, 15, or 30 minutes of the morning, which are common little psychological slices of the clearing range, you can see that if we're going to have a gap, kind of a gap fade, a gap and flop, if you will, we're going to break early morning support in the first 5 or 15 minutes. So these are just things I look for. There's no rule. Yeah, there's no rule. And I absolutely do not expect gaps to fill that day. I don't know where it became a thing where traders believe that if there's a gap, there must be a fill. I don't believe that to be true of the session. Eventually gaps fill. That's true, but we don't know when. So if we have a gap up, look for support to break. If we have a gap down, look for resistance to break, and that might be on the path of the gap. Let me give you one more bit of guidance. The hole, the gap, that space, cut it in half, right? Cut it in half and make that your first target. So again, still do not operate with the expectation that that window will close, that the gap has to close. It really does not. So good stuff. And I hope that helps. Thanks, Eddie. Next up, Netflix. Netflix released a Dumb Money movie. Oh, is that? I keep needing to watch it. But then at the same time, I'll tell you, it's hilarious, Gold. I keep meaning to watch it, but I have a funny relationship with trading movies now. I kind of find them entertaining, but sometimes irksome. So The Big Short, awesome movie, so well done. And yet it teaches traders the absolute wrong thing about what it means to be a trader. We're actually celebrating folks who risked way too much, way too early, right? But happen to have made a lot of money. And we think, oh, well, that's our job. We call tops, we call bottoms, and we make big, audacious bets. And, I look at Big Short, which the book and the movie single-handedly probably has ruined many a trader, and it certainly has absolutely ruined really common sense analysis. You have websites, you have newsletters dedicated to the end of the world. And how long have those been? I mean, look, I've got books from a certain author. I'm not going to mention his name, but I've got a book I'm looking at right now. And every single book this guy has written talks about the end of something, the end of the currency, the end of the world, the end of something. Pretty sure we're at all-time highs in the NASDAQ. So what I want to tell that guy is, how do you sleep at night? Because you've kept a lot of people from making money. He doesn't care, clearly, right? But then I want to tell the folks listening to this bozo, how's that working out for you? How's it working out for you betting on, and people love this stuff, the person who wants to talk about how the big crash is coming. I don't know why people like it. And I frankly, at this point, don't care. This is what I know. The markets are geared to move to the upside. Is the game rigged? Yeah, it's rigged to the upside. Take a look at the market at almost any 10-year chunk, right? I'm not saying we're going to be long every day, but it is certainly the easier way to trade. No doubt. So, it's kind of funny when I look at these movies, I think, oh my gosh, they celebrate the wrong thing. And I don't know if Dumb Money's any good. Go Bureau, let me know. Let me know if it's going to be irksome or not. I liked Boiler Room, Sam. I thought Ribisi was great in Boiler Room. Vin Diesel was in it. Ben Affleck has his great kind of Glenn Ross little moment in there. Yeah, it was definitely entertaining. Margin Call was really a bit good. Sam, Margin Call was basically, how do we take the Lehman implosion, kind of change the names a little bit, right? I thought Margin Call was excellent. It did not celebrate. Yeah, it just told a story of a loosely veiled, very lightly veiled Lehman Brothers implosion. Yeah, I thought that, Sam, great point. Yeah. But Gold Bureau, let me know about Dumb Money. Yeah, Boiler Room was good too. Kind of sad, but yeah. Kind of sad, but yeah. But Margin Call was excellent. Scary, sad, and true, right? Didn't celebrate terrible behavior. All right, let's see what else you've got going on this morning. Got a few folks asking me about bonds and notes. So let's go take a look at ZN and ZB. ZN and ZB have got to react. So don't make too much of this, but definitely pay attention. gold, bonds, and notes tend to move together because gold is sensitive to real yields. Notes and bonds are sensitive to where the traders of them, expect rates to be 3 to 6 months from now. These are quarterly contracts, by the way. Bonds trade March, June, September, December. So when we take a look at something like ZN, why have we lost so much of look at the swagger that the notes had moving higher? That means yields were dropping. What happened there? Why have we flattened out? Well, because if you've taken a look at the last week, especially the last week, expectations for a March rate cut have really come down. And it doesn't mean we're not going to get it. It's just less probable than it was even 2 weeks ago. Expectation for rate cuts are still quite high for the May meeting and for the June meeting, but March has been, sobering. All right. So bonds have to respond to that by saying, oh, if we're moving higher, which means lower yields, we might be getting a little ahead of ourselves, right? Because this is the ZBH contract, the March contract. So the March contract, the H contract, has to respond to expectations that the Fed may not cut in March. So if I look at ZBH 2.4, I'm specific to the contract. See how it's pulled back a lot in the last few. Why is that? Because we had a significant adjustment in Fed fund futures that said, whoa, we better cool it on those high expectations for the cut from Powell and Company. Let's go out to ZBM 2.4. Now, what is this? The bond symbol is the first two letters. M is the contract month or the delivery month, and 2.4 is 2024. So let's take a look at June. June's doing the same thing. It kind of has to, right? It kind of has to, because if we're expecting no cut in March, that means everything past that point also deals with that. Now, I don't know if I'll be able to pull up a U contract here or not, but this is where near term, the bond market has to see what's happening with Fed fund futures and the target rate probabilities and make an adjustment. Is this a move to the downside that's significant? Oh gosh, no, gang. This was the most disappointing thing about this move was that it got below the 34 EMA wave. You can see that there. And it's below the 200. But it's not as if it's busting down through the daily price movement range. It's not as if we're punching down now still to lower lows. If we want to know whether or not the next leg is going to be up or down for ZB, I'll tell you right now, Friday is going to be a big day for that, right? So I've been getting questions about notes and yields. And if you take a look at the adjustment that was made in target rate probabilities, this had to happen. So last week would have been the 15th to the 19th, right? This is the 16th. There's the 15th, 16th, 17th, 18th, 19th, right? That was last week's, oh my gosh, the Fed may not cut in March. And then now you see how it's simmering down. It made the adjustment. So I wouldn't take too much more than we had to adjust to a slightly less dovish outcome for March. And then we'll see what happens with the PCE on Friday. Now, ZN is doing a little bit better. So if you were to compare the long bond to the 10-year, the 10-year is a little bit more stable. The 10-year didn't quite pull back through as many significant levels as the long bond did. So I think that's a pretty important distinction there. All right. Let's see. ES Move says, when is the best time to buy a call or put? I feel like I lost an opportunity on Netflix. You in fact did not, my friend. You didn't miss anything. Just because there's a big move doesn't mean there was a setup in front of it. Netflix, I would largely be bullish. Right? And in fact, take a look at the video that I cut yesterday, ES Move. It'll explain some of the levels. It'll explain the directional bias and so forth. But nobody knows it's going to make that move. Because if they knew, then it wouldn't have gone up to 546, right? So the size of the move emphasizes how few people were actually already in that trade taking advantage of it. That's why it's such a huge move. Everyone's playing catch up to it. So it surprised a lot of folks. But if you check out yesterday's video, I think you'll find some answers to your questions there with a lot more detail than I can give you here as we wrap up our show. As always, gang, thank you so much for joining me for Charts and Coffee. Caffeinate and dominate, my friends. I'll see you tomorrow. Same time, same station.